Hi everyone, I hope you're having a great day. If you have not watched any of my videos before or you're not too sure who I am, my name's Patricia. I'm a licensed real estate agent in California. I service Sacramento County, El Dorado County, Placer County, Nevada County, and the surrounding areas. If you're looking to purchase a home in the next couple of years or sell your home, I'd love to help you, so reach out. In this video, I'm going to go over some steps that you should be taking as a buyer if you are looking to purchase a home in the next couple of months to even in a couple of years. But if you do want to become a homeowner, this is going to be a great video for you. I'm going to try to keep it very brief and straight to the point because I don't want to take up too much of your time. If you have any questions, feel free to reach out to me. You can call, text, email me. I'm always available to answer any questions that you have. And with that, let's go ahead and dive right in. So to start, let's discuss credit scores. So when you go to get a home loan, they are going to look at your credit score, your debt to income ratio, all of your finances in the big picture. Your credit score comes into play with your interest rate and qualifying for certain kinds of loan. So of course, the higher your credit score is, the better situation you're going to be in. Now, if you do plan on going on the loan with somebody else, maybe it's your husband, your wife, your parent, just a friend, whoever it is, they do take the lower of your two credit scores. So if your credit score is 850, that's fantastic. But if your, husband, wife, friend is 650, unfortunately, they're going to look at the 650, and that's what it's going to be based off of. And so with that being said, keep working on increasing your credit score. Keep your credit cards at 30% of their limit. Keep paying them down every month. If you have an auto loan, just keep making your monthly payments, keep building that score. The second tip that I have is keep your debt low. If you're thinking about buying a home in 6 months or even a year, now's probably not the best time to go and get a $20,000 car loan out. So I would recommend keeping your debt as low as you possibly can. Keep just paying it off. But what loan officers do when they're qualifying you for a home loan is they look at what's called your debt to income ratio. And so they do the numbers to make sure that that you have enough income for your current debt, but once you add this mortgage payment on top, that you're going to be able to pay it plus some. So you want to make sure that your debt is super low, as low as you can possibly get it. But also keep in mind, and this brings me to my third point, you also are going to want to have funds saved for your down payment, your closing costs, your inspections. And of course, I always say it's good to have a nice little savings account when you first move into a home, because when you're a homeowner, now you're responsible for the home completely. So it's not like when you have a landlord. If your dishwasher goes out, there's nobody you can call that's going to pay to get it fixed. That falls on you. So you want to make sure you're not spending every single dollar in your bank account to purchase a home. So a really good thing to start doing is start saving your money. Save as much as you possibly can. Your down payment can be anywhere from if you qualify for a conventional loan, it can be as minimal as 3%, and of course it goes all the way up. If you're doing FHA, 3.5% all the way up. Now there are also first-time homebuyer down payment assistance programs, and so if you do one of those, you can do 100% financing and not have a down payment. However, there are some extra closing costs associated with that. I'm not going to get too into the first-time homebuyer programs, but if you're interested in learning more about that, let me know. I know some really, really good loan officers that can explain that in more detail to you. As for your closing costs, this is going to range anywhere from, I would say, 2 to 3% of the purchase price. And again, I want to mention really quickly, these numbers are just based off of what my clients here in California have been paying for closing costs. If you're in another state, there's a very good chance that these numbers are going to be different. But here locally, I see anywhere from 2 to 3%. So you're going to want to make sure that you have funds saved for your down payment, your closing costs, inspections. On average, I would say most buyers spend $400 to $800. Yeah, about $400 to $800 on inspections. So you want to make sure you have money aside. So just keep saving your money, save as much as you possibly can. And the last item that I wanted to talk about is you want to make sure that you have a steady income. Loan officers like to see 2 years of job history in the same industry. So for example, let's say that you worked at Mel's as a waitress for a year, and then you switched over to Applebee's, and now you've been there for about a year as well. Some loan officers are able to put those together because you were in the same industry. So there's ways around certain things. But the big point of this is if you're looking to buy a home within the next 2 years, you don't want to be switching jobs, moving jobs all over the place. So if you possibly can, stay put at your job. And also, if you stay at your job for a good period of time, there's a very likely chance you're going to get raises, promotions. So that also bumps up your income, which helps with your debt to income ratio. So in summary, if you're wanting to purchase a home within the next couple of months to even 5-10 years down the road, I recommend that you keep working on building your credit score, saving your funds for your down payment, closing costs, and specs. Just keep saving your money as much as possible. Keep your debt low. And the last thing is you want to make sure that you have that steady income. So if you possibly can avoid it, stay at your current job. Try to hit that 2-year mark, and then that way, and don't hit the 2-year mark and then leave to a different job and then try to get a home loan. You want to still be at your current job. So just keep your steady income, keep working on your job, work really hard towards raises, promotions, and by doing those 4 steps, it's going to put you in the best possible situation for when you're ready to purchase a home. I hope this video was helpful. If you have any additional questions, please feel free to reach out to me. I'm always here to help.